Let me present you. Oh, that was weird. So let me present you with something else, which is the fact that look at sort of this particular area right here where the quarterly VWAP sits, right? The quarterly VWAP is sitting in this area of 3850. Okay, so if we bounce out that 3850 and then we start reclaiming above this diagonal trend line right here around 3940 or something, I believe that we may push higher towards 4180, maybe all the way up to 4300 points. Okay, but that remains to be seen. And if, by the way, if that is the case, I am fully expecting BTC to trade up to 20K. The quarterly opens around 19.5, but I'm probably thinking 20K, maybe as high as like 22, 23 up here. Again, that is if the equity markets don't just, shit the bed and start nuking. If that does happen, I would think that BTC then goes into a range bound situation where it will once again probably trade to the low of the range sooner rather than later. Okay, and then of course, same goes for Ethereum, right? Like I think if that does happen, equity markets trade lower, well then, this becomes the larger range for ETH. Lower bound range around 1100 or so, higher bound range around 1300. Okay, I am, however, a little bit more optimistic, as I wrote in this thread, to the people that I really like and respect, GCR and Mohit Singh Soro. I think incredibly smart people, right? Obviously, no one can be 100% right. No one can be 100% wrong. At least I don't think so. I think these two people have properly laid out a case, which again matches with my whole overall theory of why I believe the market, can trade up a little bit higher. And then finally, I do want to wrap up. Like, I still do believe that 2023 is not going to be a walk in the park here. I don't think it's as easy as long now close at the end of 2023. I think the market in 2023 could be such a mess, probably even more volatile and indecisive in 2023, more so than 2022, because technically in 2022, the market was actually clearly decisive, which was it was trading down the entire way. We, I think, as a collective unit in crypto, just refused to believe that prices could get to such extreme lows. I think that the mistake of 2023, I think people will make is also that the market could go up to decent highs like, 24, 25K, and then they could still break down to, I don't know, like 14 or 12,000 or something down here. It doesn't mean that you need to prey on it and you have to wait for the 12,000 low. It just means that, the probabilities are decently high that the market in 2023 could be really messy. But if you're, already a buyer at 17, you get a 25, 30% discount at 12,000, right? For BTC. And, again, altcoins for the most part, like Ethereum, I think is down, I want to say 80% from the highs, right? Like how much is ETH down? Let me see. Whoops. Let me see from this high. ETH is already down 74%. Solana, I think, is down like maybe 75% or something, or I'm sorry, 85%. Could be even more. Okay. Let's see here. I don't know why my internet is so slow. I apologize. So from here down, Solana's already down, 95%, right? So for the most part, we already know that most of the market's beat up. Like if you're kind of waiting for the market to, sell off more for another 10, 20% drops because you think that, I don't know, you want to pick off the exact bottom. Well, I got news for you. Like, by the time you want to buy the bottom when the market is nuking another 20, 30%, you probably won't. If you're a trader and you're like, okay, well, I don't find this opportunity to be that great to be buying because there's no dislocation in the market, that's a different story. But if you're like a long-term buyer, Bitcoin, Solana, ETH, Matic, all this stuff, you're getting pretty good discounts right now. Okay, so, long story short, right? I am for now a believer that here's kind of what could happen in 2023. And, again, I think other people may have reiterated the story in the traditional media, but here's how I see it. I believe fundamentally that inflation is going to be coming down, but I don't think it will come down as fast as people think to 2%, right? Like 2% is what the Fed talks about, 2% target, right? I don't think it'll come down that fast, that hard, probably even next year. I believe that it will take the market a while to, first of all, keep inflation down and bring it down to that 2% target. Add to that the fact that, equity companies, labor market, earnings, all these things are going to be tightening up into next year, especially Q1 of next year. When earnings come down, what it does is, the stock market companies, the public facing companies, they become a little bit more conscious of their bankroll, if you will, right? They become conscious of their expenditure, their workers, how many people they have, the productivity levels, overall, what kind of profitability do they have? And when that happens, right, say companies like Apple, Tesla, Microsoft, Google, all these companies, they're already starting to go through, a layoff process, right? And the layoff process is not instant. Like, it's not like you have one layoff and that's it. Like, in times of recession, times of a tough economic, downtrend, right? Labor markets, especially in big tech companies, well-capitalized companies, can get extremely tough. So one place that you can look at data is daily job cuts, right? This is a great website, by the way, if you want to really look up, information about who's, laying off workers, what's going on in terms of, companies, public companies or private companies. And by the way, private companies are also facing their own struggle, right? Private companies may be finding it hard to raise money in this environment because money itself is more expensive, right? As we see, say 10-year rates, bond yields, all these, government bonds, right? Treasuries climb. Well, what that means is, money itself, especially with the interest rates, gets more expensive, or rather people find it a little bit better to park their money in yields or in treasuries, sorry. And so when that happens, money flowing into private companies, money flowing into the stock market becomes a little bit tighter. People become much more conscious of their expenditure. And that may mean by, it could mean that you have to lay off more workers, which could cut costs, which again, would at some point reduce inflation, because when you start laying off workers, right, more people get laid off. Companies are cutting their earnings, meaning they're cutting their expenditure by laying off workers or cutting R&D, cutting certain, plant like output, right? Maybe they're not producing the same amount of products. So that lowers, GDP in general, which is again, a bigger factor of, economic like success, right? How economies thrive. And so when you also cut jobs, well, then that may reduce inflation too, right? People are going to spend less when they don't have jobs. So this is where we are, in my opinion, in the cycle, which is, I still think the tougher like leg of that recession part is ahead of us. I wouldn't say it's going to be, super like detrimental as 2008, 2009 was, but I do think it will be a tough environment. And in that tougher environment, this is where I'm going to draw back to crypto. Okay. So in that tough environment, right, I believe that the market can easily trade up into this high right here. And then this could be the broader range. Okay. This could be your mini bottom side deviation if prices climb back above. I'll show you guys this. This is actually a unique way to look at the market. I don't know if other people are paying attention to this level, but I am. If I drag this level out back here, I think this level is somewhat important, but I believe this level right here, 18,675, let's just say 18,500, that is a critical level. It's a critical level because we spent majority of our time tagging that level. Like, so these candles closed above that level. Okay, these are dailies, wicks, close wick, wick, you know, mostly wicks, some candle closes below, but quickly reverses back up. Wick right there, wick right there, wick right there, nukes. Now, what the market needs to show us is that it needs to be able to climb above 18,675. Until it does and remains here comfortably, right? Until it does that, this is still our range. This is our broader range. Once it gets above 18,675, it can easily trade up to this high, oops, up to this high right here, which is 21.5, and quite possibly up to local high right here around 26,000. Okay. So that's kind of how I'm looking at the market. Now, when we get to, say, this range high, actually, let me just pick up this box here and lay it out like this, right? So let's just say this is our range. This is our mini deviation. So let's just say in a, you know, in a ideal world, right? Maybe we spent this area down here, and this is your deviation, okay? We call deviations because they're excesses outside of a range where they don't spend generally too much time in context of a larger range. So if this is, you know, the context of the larger range, and we're only spending, say, a month here, and we spend 3 to 4 months here, right? What price needs to show us is it needs to come back above this level, hold inside this level, and start trading up to the high. And once it starts trading up to the high, this is where things get interesting, okay? I believe that once prices get towards this 24, 25K high, it could trade even higher. Like it could get to, you know, 30,000 or something. But, you know, I still think it could still be like this. Once it gets to, let's just say this level right here, at, you know, some point, January, February, March, whenever that happens, right? What you need to be looking out for is signs of froth. And when the froth really comes in and people are starting to talk about 40K targets or 50K or whatever, that may be the time to consider getting out. Okay, again, not investment advice, but I'm letting you know that once people start talking about this and this like right away, it's more than likely this happens. An unexpected event, an unexpected shakeout, in the same way that COVID crash happened in 2020 right here. When prices were up here, people were pretty excited about, oh, well, you know, from here, we're just going to rip on up, right, to 20K and whatever. But COVID crash came. And again, I'm not saying every crash has to happen the same way like COVID. And COVID was once in a, you know, multi-decade event. But it doesn't take that much in a bear market, in an already existing bear market, to, first of all, smash prices up, get people super excited, you know, and then after that, grind, and then nuke maybe second quarter of 2023 or you know, third or fourth quarter of 2023. Okay, so that's kind of what I'm thinking. And personally, again, I still think there's a decently high chance that we tag 12K down here. Like even if you look at, you know, from a monthly basis, right? Like from a monthly basis, I mean, to me, this is kind of like, in my opinion, I think this area right here is probably the last time we had a very good SR level on a monthly basis. So that's around 10,000. You could make the argument that, oh, this is your mini, you know, sort of order block right here around 10 to 12K. Again, you know, it's pretty close, right? Whether it's 11 or 12K or 9 or 10K. Okay. But that is from a monthly basis, you know, the level that you need to be looking out for. So anything in this little pocket right here, if you start trading into this area on a monthly tag, now you've got yourself a very, very unique risk to reward buying opportunity. Okay. Here, if you're starting to get long with the hopes that from here, the market has to pop. And if the market goes down 20 or 30%, if you're forced with like liquidation or whatever, it will be a terrible mistake because you are already so close to low. You just didn't wait long enough, right? So question is like, if you're getting long, just anticipate. Yeah, it could pop higher, but yeah, it could also drop, 20, 30%. Okay. And of course, same goes for Solana, Ethereum, Matic, whatever else you're looking at, in the market. Okay. That's my sort of overall thought process, on the crypto market, is that you need to be aware of these situations where the market can go up, with this whole echo bubble rally people are calling, but don't get too excited that it's going to, happen right away. And don't get too excited that it's going to, go all the way to 40 or 50 or 70K. It may just pop like above, I don't know, 25 or 28K and then roll over again. Right? It's like kind of what happened back here. I remember, in January and February 2020, we just had one candle, 30% move. This one popped another 10%, then roll over, and then this one dropped like 50 or 60%. So those are the situations that you need to be watching out for. Okay. All right. I think that's pretty much all I have. I do want to show you out, liquidation data, of course, piled up last night, right? $100 million in a lot of liquidations piling up. So not a bad sign. Like, you definitely want to start seeing some cleanup in terms of late longs, like those that got super excited right at the highs. I think I bought at 18 flat, and I'm gonna buy a little bit more here probably, but I also am aware that the market could drift lower. Okay, so I'm not just going to blindly degen long here. Okay, so always manage your risk in the current market conditions, especially when equities are being very, very fussy and uncertain. Never try to guess what the equity landscape picture looks like, because that one is a complete mess. Okay. There's just so much turmoil happening in the equity markets, so much volatility. You need to be aware of, all the things that are, effectively, impacting equity markets, such as Jay Powell's, hawkish behavior, earnings coming up, companies and, stock market, public companies preparing for a potential recession, things like that. Okay. Anyway, if y'all like my content, make sure you hit the thumbs up. Make sure you leave me a comment of your thoughts. By the way, make sure you check out this awesome thread about just, 2023 theses in crypto. And yeah, that's it. Okay. Good luck, everybody. Take care. Cheers. And we'll talk soon.